Thank you so much for giving me the opportunity to present the company and elaborate on our situation. So CellaVision, this is the company presentation. I will first do a bit of an intro of the company, and then we'll get into the current situation in light of our Q3 results reported last month. CellaVision in brief, we are a company that is located in Lund in Sweden. We have a total of just short of 250 employees. We have acquired a company in France, RAL Diagnostic, back at the end of 2019. So we possess both instrument, software, and reagent. Our solution consists of those three constituents. We have everything in-house except for the actual instrument assembly, which takes place with a partner in Jönköping in Sweden. Our business model relies on indirect sales. So it's indirect sales through distribution partners in the field of hematology. So blood-based diagnostics, and I'll get back to that in a second. We have direct presence pretty much in more than 40 countries, covered by our own market support organization, 16 organizations that works together with our distribution partners in the field. Essentially, CellaVision has a vision of advancing laboratory workflows and diagnostic certainty through intelligent microscopy. So that's what you're going to hear about. If I take you into the hematology lab and we look at the large labs, this is the blood-based lab. This is where CellaVision has built a market ever since 2001 when we launched our first instrument. So essentially what happens when you take a blood sample is that you load the sample onto a cell counter, which is the instrument provided by our partners. If there's abnormalities in the cell sample, in the cell distribution, then you would need to make a smear and stain the slide and go on for microscopy analysis. This is where we come into play. So we deliver the stains, the staining protocol, and then we've substituted the manual microscopy process with a digital cell morphology solution. So the digital cell morphology is able to take the image, enlarge, and also AI, so intelligently interpret what type of cells are present in the sample, and then classify the different cells, white blood cells, red blood cells, and platelets, into different categories, and it supports the doctor in making the decision as to what other analysis needs to be done and what disease states are we talking about on a given patient. I said in 2019 we acquired the company, RAL Diagnostics, so we also have reagents within our portfolio. We also launched a smaller digital cell morphology solution called the DC-1. This entire solution allows us now to target small or serve small and mid-sized laboratories. So we can provide the full workflow for small labs where the work procedures are not as, they are more manual. So here we can standardize the microscopy analysis. So this is what you see on the lower hand side of, or the lower bar, where we both provide smear making, staining, stains, and the DC-1 at the end. So we have a full workflow solution we just launched in Q3, which we call the diff line, where we have this a non-automated smear maker and a stainer, and then feeding that on together with our stains, we have a total solution. So we deliver patient values, we deliver a cost-efficient solution where you can save time and labor, and the consistency, we take out the human variability, the difference in training and experience from the medical staff. So we provide accuracy as part of the diagnosis. That is part of the benefits that our solution deliver. If we look at the markets, well, we serve the global market via our partners. The large lab market, we believe, is around 17,000 large labs. And on our journey of adopting the large labs, we've come to approximately 24% of the large labs have been penetrated by and having our solutions in the lab as part of their lab solution. There's a replacement cycle of 7 to 9 years in certain jurisdictions. We believe it's in the lower hand of that interval, but that's kind of the normal thing. Typically, our instruments are substituted together with the cell counter, so it's the entire bloodline which is exchanged as part of the business or the way the hospitals operates. As said, we're looking into the small labs. It's a much more fragmented segment. We have many more labs, many more small labs, 100,000, and we have made a crude assumption around half of it would be addressable. There's a sub-segment here which is associated with the large labs, so satellite hospitals, and then you have a sub-segment where it's standalone labs, and they do their morphology analysis all by themselves. Here we've just started the penetration journey, and we are seeing traction with double-digit volume growth. Last year we reported 56% volume growth. So we're at the beginning of the penetration curve, but we see traction in the market for this. Generally, you can say the macro trends here. Demography speaks in our favor. We believe there's maybe low single-digit increasing blood samples, but the increasing prosperity and the aging population provides a growing need for the solutions that we provide together with our partners. We also see consolidations at the hospital level. Not necessarily the blood sample will be centralized, but the management of it. So the hospital systems in certain jurisdictions, such as the US, you see a large integrated health networks that we can serve with our solution. And this is another thing that is really important for us, because we also provide all our solutions, whether it's small or large lab, they're tied together in an ecosystem with connectivity. So I will get back to that. Because the strategy we pursue, this is a strategy we launched this summer. Here we are continuing our journey to maximize our presence and adoption of the large labs. It's pivotal. This is what we've done for 2 decades. So that's a very, very important thing and element of our strategy of keep on developing the superior solution for the large labs. We tied in the DC1, the small labs, and we're now on a journey of really building and serving these hospital networks so that you can deliver digital cell morphology in a web of labs. Our reagents, this is a very important strategic pillar in our strategy. We're the only company who can provide both reagents, software, hardware, tied all together for future solutions. We have started to, when we acquired RAL, we have a pretty strong presence in Europe for historical reasons. And we're now on the journey of evaluating, registering, and pushing for our reagents to be adopted in APAC. And obviously, we would like to bring our products to the US. We believe our methanol-free and environmental friendly format will be the key to unlock the US by delivering more customer value, environmentally friendly reagent. So this is our play. We've also added a 4th pillar. We are developing and investing our cash into specialty analysis. We've identified more additional clinical needs to serve in the hematology labs. So some of them also in peripheral blood samples, but also in other sample formats such as bone marrow. So we are digitalizing the analysis of those more or less frequent diseases, if you like. So here we are setting up a new team. We're expanding into that area. And that allows us with 1, 2, 3, 4 pillar to really build an ecosystem that I'll come back to on the next slide. But this is really pivotal. We've taken our addressable market with this strategy from 2 billion SEK in the large lab segment to 5 billion in total. Finally, given the journey we've been on with CellaVision, given the fact that we have acquired unique capabilities, both within hardware development, software development, all the things that are now exploding everywhere with artificial intelligence, machine learning, these are capabilities we have acquired over the past decades. So these are not new to us. We believe there are opportunities in new areas for CellaVision. So our core is hematology, but we are starting to invest in new technologies. We saw it last year. We acquired a unique patent portfolio that we're now expanding upon. So we will be able to revolutionize microscopy, both to serve the next generation's hematology solutions, but also to identify other pockets of growth. So we're at an early feasibility stage, but we have identified some opportunities that we're pursuing currently with a new team that we have acquired throughout this fiscal year. So this is the fifth pillar. This leads me into the hematology aspiration of building this ecosystem. So as you can hear, we're serving the customers no matter whether you're in a large lab, small, medium lab. It's tied together. So it's reagents that make sure that the input that we put into the digital cell morphology solution, the pre-analytical steps, are consistent and standardized. So by then we can guarantee the best result for the patient. Now, not only peripheral or classic peripheral blood is analyzed. In the future, we will have more diseases coming into this ecosystem, and it's tied together and serves and can be read in the patient journal of no matter where you may be. This ecosystem with remote review allows a second opinion of a given sample. So the doctor, no matter where you may be, distant from the lab, you can review the slides and you can make your decision to the best of the patient. Financials. So these are our financial results from Q3 up against last year, and then we have the year to date. We report on a calendar year basis, and then on the very right-hand side we have the full year results. We just reported a Q3 results of 141 million SEK. This was 7% growth, however, minus 3% organically. Q3 is it's a challenging year from a seasonality perspective. Typically, we see a slowdown in Q3, given the seasonality of vacation in Europe and in Americas, so you don't have as many installations. But this quarter, we were severely hit by the lockdowns in China. So we were facing challenges from the fact that we served China in Q2. However, these instruments were not installed throughout our Q3. So we had a very, very low Q3 of 8 million in the entire APAC region, which was really took us down, if you like. On the gross margin side, we delivered a gross margin of 68%. It's 1% lower than last year. We have been challenged from the increasing inflation. So material costs have gone up, not just 1%, but we were able, with the FX tailwind, we could compensate for the loss in gross margin this quarter. So we are working heavily on getting out of more expensive purchases of materials that we've had to do throughout the period here where it's been really a supply shortage. We see some light at the end of the tunnel. And at the same time, we're obviously also working on how to raise our prices in light of the contract that we have, so we can increase and compensate for the pressure on the gross margin. Operating expenses were 56% of sales, so we went up to 79 million. We incrementally increased our R&D costs with 13 million. 3 of them were a write-off of projects that we are not continuing, projects that were sitting from before COVID, and they do not make sense to continue. We've captured them in another way. And then obviously we're up against the compare where we didn't travel. So we also had incrementally 6 million in sales and marketing now that we've started traveling and engaging in trade shows, etc. So it led us with an EBITDA of 29 million, so only 21%. Year to date, 31%. As you can see, we did 35% last year. Our goal is really to be at the 30% or more mark. So Q3 was lower than expected, of course, a function of our top line, but also the fact that we have been successful in ramping up the teams to execute on the strategy, the power of focus I just mentioned. So obviously, we've onboarded new costs, and now we are probably levering off. So this fits pretty well with the presentation at the Capital Market Day, where we said we will go up from 18 to about 20% of R&D cost up against revenue. So we're kind of levering off, and now we will only be hiring the critical headcounts in order to continue our execution of our strategy and to run our business. All right. I think I will go for the summary here. So we would say we feel we're on track for the underlying business. However, we see challenging conditions geographically. We saw the last quarter where we were really negatively affected by several factors, but the majority is in China. The lockdowns in key markets out there was China. What will happen in the next couple of quarters and as it gets colder in terms of lockdowns in China remains to be seen. But hopefully we will start shipping to China in the coming quarters. We've had a lot of focus on our execution, on our power of focus strategy to build up the new teams. We've spent a lot of efforts in accelerating or compensating for the cost inflation. So we've had the use of consultants to a larger extent to validate alternatives, etc. So that has put pressure on our internal lines as well. But we also had a successful launch of our DIF line to serve the small, medium lab segment, not just a digital cell morphology analyzer, but an entire workflow solution that has been marketed. So essentially, I think that together with the fact that we are working closely with our partners to validate our reagents means that we're still off to a good start in the early stage of the strategy period. We're working hard to pursue our targets. Our targets are 15% over the course of 15% top line growth over the course of an economic cycle, and then we have an EBITDA target around the 30% plus. So with that, I suggest we also go to the questions, Kajsa.
Sounds great, Simon. Thank you so much for that interesting presentation. And like you mentioned, I prepared a couple of questions for you, and I'm also going to see if we have any questions in the audience. So the first thing I would like to know is, can you speak a little bit about the competitive situation in instruments evolving forward?
Yeah, sure. Yeah, no doubt. As said, we've been developing this market for 20 years. So competition is kind of coming up. We see it at trade shows. So there's a lot of smaller vendors that has adopted, or not necessarily adopted, but they're developing digital cell morphology solutions. Mm-hmm. The first and the most mature competitor is Mindray, our previous distributor. So we canceled our distribution agreement with them last year. They have both the cell counter, but they have also, last year, they launched the digital cell morphology unit as part of the blood line. It takes a time to get it out there. So, but certainly things are happening in that space.
Competition is creeping up.
Yeah, it's creeping up. Yeah, which is expected.
Yeah, of course. And let's speak a little bit about growth. How important do you think acquisitions will be for you moving forward?
Yeah, that's a good question. I would say the strategy, the power of focus that we're driving, it's an organically financed growth.
Okay.
We are building an ecosystem, and it's relatively difficult to bolt in other acquisitions. So for the hematology strategy, it's really a strategy where we fuel our own
organic growth.
Organic growth. On the strategic pillar I talked about in terms of the new areas, that could be we acquired one company or the exclusive license right for an underlying patent technology You could see that happen again, or as we mature these programs, that could be subject for acquisitions.
Thank you. Could you elaborate a little bit about the new areas that you're looking into, or is that top secret?
No, it's not top secret. It's obvious from the diagnostic space when you are mastering hematology and morphology, then obviously pathology is an area. Digital pathology is a much more scattered area where you analyze tissues. Here we believe that our technology could have a play. Essentially, we believe that our technology, we will be able to deliver and create high-resolution images, very, very sophisticated images, very fast, which speaks to a lab environment. So for pathology, we're also considering cytology to look into that. And then there are certain pockets within life sciences or a more generic microscope where we believe we could potentially deliver value.
Thanks for elaborating on that. What would you say is the biggest challenge for you as a company right now?
Yeah, I think there are many things externally up in the air. I think that's the major challenge.
Yeah.
Also internally, we spend quite a lot of calories to manage the inflation, which hits the cost prices and by then our gross margin. So we are working on protecting that. On the demand side, it's really a challenge. We don't have visibility as to the challenges in terms of COVID lockdowns, especially in APAC, but China, that comes to my mind in particular.
And you have huge business. A lot of your business comes from the Asian region.
Yeah, actually the majority comes from Americas, and we are year to date at over 200 million, and likewise for Europe. And then we are really not that. We're taking our hit growth-wise in APAC. Last year we did 103, but this year we are not near that.
Okay, yeah.
We're pretty much half.
What would you say is your, what are you focusing mainly on right now?
It's been a very, very busy year managing the business, but also executing on our strategy. Especially in the beginning of a strategy cycle, there's new things we need to change. We've successfully done that, and we're set up to execute now. So I think that's our focus. I think we've done well over the years also to embrace our new colleagues, our new team in France. So getting the reagent team connected with our the legacy CellaVision team, if you like. Yeah. So I think that has been good. So now we've done the big things, but now we will execute.
You mentioned France there. You said that you expanded your production in Bordeaux.
Yeah.
Do you want to just briefly mention how that's coming along?
That's coming along very well. We were a bit challenged by getting the permits and also can we actually do the construction and what about the pricing? We're executing. We started in June this year and we expect a year later. So this coming summer we will have expanded our manufacturing facility with a totally new setup. So it's going to be super exciting.
Great
and it's running according to plan.
I want to ask the audience if we have any questions in the audience.
Yes, regarding instruments, it seems like it's still a great opportunity to grow in terms of dollars. I mean, you have mentioned 25% penetration in large labs. What does it take to increase this penetration rate? I mean, it's lower in Europe, for example.
Yeah, it's totally true. We think what it takes is to position our solutions also together with the solution for the small labs. So especially for a place like US where it's most mature, we see traction from the fact that we can now also serve the small labs, which will be the total solution will be attractive. So we think we're well set up also for the replacement market. For Europe, you're absolutely right that the penetration is a bit it's more difficult. When it works for the US, it works across the entire continent. However, in Europe, it's really individual healthcare systems. So the proposition doesn't travel as fast across borders. So here we will need to do very country-specific adoption and really convey the message and the value proposition of digital cell morphology for each country. So this is about being very close with our partners and working and untying that country by country. This is one of the reasons why it's more, the maturation level is really dependent on the individual country.
Okay, and could you mention perhaps where you are in the rollout of the smaller instruments? I guess you did some activities during the summer, for example.
Yeah, we have. So we essentially, if we start with US, we got 510K at the end of 20. So we've had 1.5 years of launch. We see tremendous interest for the DC-1 instrument, and now also with the diff line. We expect that to be a facilitator of really getting a standardized workflow across the US. Likewise for Europe. We think the diff line will help the fact that we are not just talking about digital cell morphology, but we are solving the issue in the lab. That's another lever. So we are pushing for that. Of course, we've launched it. Our partners also need to launch it. They are amplifying the message towards the labs. That's how we work. But we're on a good start, and we've gotten some very good feedback from end users around the diff line. So that's pretty exciting.
Okay, thank you.
Let's see if we have any other questions from the audience.
Yes. Yes, so I just wanted to know, when you target small to medium labs, is there a difference in terms of the strategy when you sell to these labs? Naturally, they might request other solutions, but is in terms of how you approach the sale, is that different from if you compare to large labs?
It is different, but I think it's different depending on whether you're targeting a small lab that is associated with a large lab. Because there, the purchase decisions sits pretty much with the large labs, and then it kind of flows from there. When you approach standalone small labs, you're really onto influencing also the purchase decision within the small lab, within the standalone labs. So I think that's a bit of a difference. That there you don't only challenge or position the workflow solution and the benefits of digital cell morphology, but you also have the conversation around how to adopt and when to place the instruments.
Okay, and also in APAC, this is a region that previously tended to be more conservative when it came to adopting new technology. Would you say that is changing, or is it still a very hard market to penetrate?
Yeah, I think APAC is too broad of a label. I think we have to dissect it into Japan and China, which is our largest markets. And then I think there's a broad region of the other countries where it really varies. The healthcare systems are very different. You may have cheap labor, which is a competitor to our solution. So I think it varies quite a lot across the region. But I think certainly for the large areas, it resonates with them, with the digital cell morphology solution.
Thank you.
I think we got one more question here in the audience, so let's hear it.
Just a clarification on penetration versus market share. When it comes to these automated systems, what is the penetration on the large labs? I mean, what percentage have adopted automated systems,
20%.
Yours or otherwise?
Yeah, 24% is the number we reported in the beginning of this year. So we're probably at 25, or we typically adopt 1 to 2% per year. So the adoption of large labs will be around 24 to 25%.
And your market share?
Our market share is pretty much 100%. So we're the only, pretty much the only solution provider out there yet. There are other companies coming out with solutions. We don't see them in the labs yet. So, but if we say what is the rest, that is manual microscopy. So if you take what is the market share up against manual microscopy, then that's the adoption rate, so to speak, when you talk about the large lab.
And for the smaller labs, what sort of time frame do you expect to be able to reach a market share of 10%?
It really depends on the region. I think the fastest will be the US again. They are the most mature in this, and it's kind of received as a plug-on solution to the lab structure. For Europe, I think it'll take quite some years to get to the 10% mark, and for APAC, it's very scattered. It will be a very long time frame.
And profitability-wise, is there a difference between the large labs and the small ones?
It's about the same.
Okay, thank you so much for all the great questions from the audience, and thank you, Simon, for presenting today.